Hello everyone, my name is Vino and it's January 30th, 2026. We've reached a final working day of the month, and as it's Friday, I wanted to take a moment to reflect on what's been happening in the precious metals market this month. This January has been truly extraordinary, especially for gold, silver, platinum, and palladium, which have all seen massive price gains.
Geopolitical tensions, a weakening dollar, and concerns over supply shortages have been driving this unprecedented rally.
Gold has broken records, surpassing $5,000 an ounce, even peaking at $500 at one point. As I'm speaking to you right now on this Friday morning, gold is hovering around $5,180. But silver's surge has been even more dramatic. It shot past $100, then $110, and even briefly touched $120 before stabilizing at around $108. However, this price is incredibly volatile, so it could be anywhere by the time you hear this. The reason behind silver's sudden spike seems to be rumors of a significant short squeeze, particularly involving bullion banks that have been shorting the market. This is a common strategy, where traders sell contracts months ahead, anticipating that prices will stay stable or fall. But when it comes time to deliver the metal, they might face a shortage or difficulty in sourcing it in the right form, adding fuel to the short squeeze. Looking at the bigger picture, we also have the influence of Trump administration policies, particularly in trade. These, along with Jerome Powell, the chairman of the Federal Reserve, were downplaying the significance of rising gold prices and the weakening dollar, have contributed to the ongoing turmoil. Powell's stance on ignoring the market signals, like gold and silver rallies, contrasts sharply with former Fed chairman Alan Greenspan, who saw gold as a critical barometer for economic health. Speaking of the Fed, Powell's dismissal of the falling dollar raised some eyebrows. The Fed oversees the US dollar, yet Powell seemed unfazed by its decline, even as the dollar dropped 10% last year. This is raising questions about how much faith we can place in the system, especially when the world's oldest store of value, gold, is on the rise. As for where gold and silver prices could go from here, analysts are forecasting gold potentially hitting $6,000, with silver possibly reaching $150. Though, as with all predictions, these are speculative and should be taken with caution. Another factor at play is the supply-demand balance in platinum and palladium, where demand, especially from the automotive sector, is outpacing production. Both metals face supply risks due to geopolitical instability in Russia and South Africa. Any disruptions could cause even more volatility in their prices. On January 28th, I was questioned about the rapid rise of gold and silver and if it signaled a loss of confidence in the US dollar. His response was dismissive, asserting that the Fed wasn't concerned with the gold market. However, many major players in the financial world are linking the rise in precious metals to a breakdown in confidence in the dollar. A key part of this issue is the Trump administration's use of tariffs, which have caused significant uncertainty in the markets. Since his inauguration, gold prices have soared by about 90%. Tariffs on goods, particularly Canadian products, combined with contradictory statements about the dollar, have only fueled this confusion, as the dollar has dropped to a 4-year low. This situation is reminiscent of what's known as the debasement trade, where investors shift away from fiat currencies in favor of tangible assets like gold. With the dollar in decline, gold is once again seen as a hedge against uncertainty. Central banks have been among the biggest buyers of gold in recent years. In 2025 alone, they purchased 863 tons, and this trend is expected to continue in 2026. As gold rises, major financial institutions like UBS, Goldman Sachs, and Deutsche Bank are revising their price forecasts, with some suggesting gold could reach as high as $6,000. Meanwhile, silver's massive rally in January has been driven by a short squeeze and dwindling physical supply, with the silver market currently experiencing a significant disconnect between paper contracts and physical inventories. there's concern about whether the metal will be available to meet delivery demands by March. At present, registered silver inventories on the COMEX cover only 14% of the paper claims, leading to speculation about potential shortages. Analysts have raised short-term price targets for silver, with some predicting it could hit $150 per ounce in the coming weeks. This comes as the supply situation remains tight, especially in platinum and palladium markets, which are also seeing their own set of challenges. As we head into February, it's clear that the precious metals market is in a highly volatile and unpredictable phase. Geopolitical instability, a weakening dollar, and tight physical supplies are all contributing to this unprecedented surge in prices. While no one can predict the future with certainty, it's clear that we're witnessing a significant shift in the market. Thank you for tuning in today. If you enjoyed this analysis, please like and subscribe for more insights. Have a great weekend, everyone.